You have to understand what your goals truly are to then understand the direction you need to go. Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hey, welcome back to the show. I'm your host, Todd Dexheimer, and I want to talk to you about, aligning your goals. So I was actually at a meetup yesterday, and I was asked, really the question of like, if you were to start over, what would you do? And one of the biggest things I said is, look, I would figure out what my real goals are in this and actually make sure I align my goals with what I'm doing in with my strategy, right? And so you have to really think about what your goals are. And as I posted on LinkedIn too the other day, and it's the same type of thing. Like, you have to understand what your goals truly are to then understand the direction you need to go. And what a lot of people do is they hear about other people and what they're doing and they get excited. And so I said, like, look, I'm up here talking and I'm telling you about what I'm doing. I've got my own story. And you might think, well, that's awesome. And I want to do what he wants to do or he's doing because it sounds like, Dex is being successful. So I want to do that. But that doesn't mean that is something you should actually go do. Right? You have to make sure it is something that works for you. It's something that makes sense for you. And by the way, everybody starts at a different time in a different cycle, and there's different opportunities. And so the opportunity for you might not be to get into multifamily investing, or where I first started was single family fix and flips and buying, 1 to 4 family rental properties. That may not be the best opportunity for you. So where is the best direction for you to go? So really just doing that research and understanding like which path is best for me. So one piece of advice I gave is like, look, first thing I would really do is to do some soul searching and to really figure out where you want to go, what you want to do, what you're doing this for. You maybe have a 9 to 5 job or have a good business. And is it worth your time and energy and effort to be distracted from that and to go out and build something new? Because that is what this is doing. You are building something new. You have to take it serious. And if you don't have the time, the energy, the effort to take it serious, you're just not going to be successful. So you're being a dabbler. Look, we offer in Endurus, we offer syndications for people who do have that 9 to 5 job. That's a really good job. They've got family. They got a full life, right? Or they have a business and their business is doing well. And so we offer the syndication to where they can come in and with very little time and energy. I mean, I do highly suggest they still put the time and energy into doing the research, making sure it's the right deal for them, all of that kind of stuff. And I'll jump into that in a second. But I think that's super important. But it doesn't take nearly as much to then do that and make, good returns, with a different risk profile. Let's say less risk profile, but a different risk profile than if you're to do it yourself. And again, there's no right and wrong. So maybe you're saying, well, yeah, but I do want to focus the time, or I have the time, and I do want to focus it on building a real estate portfolio. Then great. Again, align your goals. I'm all for it, but make sure you understand what you're getting into. And then I think it's really important to read and to study and to listen to podcasts and to listen to Audible books and to really get over to some conferences and understand all the different avenues that you can go. Because again, like multifamily and industrial were the 2 kind of hot asset classes all the way up to about 2022. Multifamily was really, really hot. Industrial was probably right there with it, maybe just a little bit behind it. And the market shifted though. And so is multifamily or industrial, are those the right avenues for you to go? Right now, I think data centers are the number one return profile for real estate investors right now. A multifamily is actually, I believe, second to last, just behind office. So, things have flipped. Senior living seems to get all the attention right now. Senior living is a totally different ballgame. I do senior living. I'm happy to talk to you about my experiences in senior living. But senior living is not, in my opinion, is not real estate investing unless you're just going to buy a building that a senior living company is leasing from you, not managing, leasing from you. But then you're just buying a commercial piece of real estate that has a senior living tenant in it. You're really just buying, you call it an office building, and they have a lease, and they're going to pay you a monthly fee. You get no upside of the of the business itself, right? There's no upside. You're just going to get a whatever 7% return type of thing. So that to me is really, that's where a lot of people are like, oh, we'll just do that. And it's like, okay, that's fine. Don't get me wrong. It's great, but that's not senior housing. That's you're buying a building and you're renting it, and it happens to be a senior housing provider. So that's not senior housing. That's call it office. It could be a very good tenant, could work out really well, but it's not going to get you the return profiles that a lot of people in senior housing are expecting to get. So, but back to senior housing, that's a full business, and you have to know how to operate, and because you're dealing with, you're dealing with medical, so you have to know what you're doing. What excites you? What gets you going? What do you think is the best opportunity for you? And again, like, don't get caught in the shiny object. It's got to be something that you get excited about. It's got to be something that you think you enjoy, that you have a real strong belief in. Like, it is what I want to focus on. And that helps create and craft your goal, and it should align with your goal. So here's where I get, I guess, frustrated, or just, kind of like or even just bummed out, right? I talk to people and they tell me their goal. And so one of probably the most common goals for real estate investors is, want to get into real estate so I can have good cash flow and long-term appreciation, and then great tax benefits. Great. I mean, that's the fundamentals of real estate. The fundamentals of real estate are good cash flow, good appreciation, so we're building equity, and then great tax benefits. So that is rental real estate. And then people will say that's their goal. And then they go and they get into flipping properties. And so they're creating very little, maybe no cash flow. They got a ton of risk. They've got great tax benefits temporarily, but then they have to pay major taxes once they sell. And so whether you're flipping a home, whether you're buying an apartment building and selling it in 2 years or 3 years or whatever that is, that's flipping real estate. And if your goal was that long-term cash flow, you're going against your goal. And so be real with yourself and understand what you're doing. Now, my goal is actually a little bit of both. Okay. So we want long-term cash flow, just slow, steady appreciation and solid tax benefits. But we also want a few properties, not a lot, but a few properties that we can get into, do a heavy lift, and get out fairly quickly and have that big upside. So then we can utilize that capital to then buy the next one. Now, you're going to pay taxes on it. It's not as beneficial. And in my flipping days, one of the things I did, this is a little bit off topic, but one of the things I did is, after I was just like kind of done flipping, trying to figure out where I was going to go next, I analyzed all my deals and analyzed my rental real estate. I had a fairly good sized rental portfolio, and then I had done a lot of flips, right? So we're talking like 100 or so flips and bunch of rentals. And so I had experience with both. And so I looked at both of those and I analyzed them, and I looked at the equity I'd built up with the rentals, and then the cash flow, and then the tax benefits I was getting with the rentals. And then I looked at the flips, and the flips were actually worse as far as profit goes. And they took a lot more time when you take, especially when you take into consideration the tax benefits. So that's how I look at things today as well. And that's why my philosophy is like that. But to each their own. Like if that flip makes sense for you, and maybe this is the time for you to do it, then go do it. Like that could make a lot of sense. Same thing if you're a passive investor. So back to the passive investor, like, look, if the role for you, the goal for you is to get into real estate, get long-term cash flow, and you go, man, I just don't have the time, the effort. I don't want to put the effort into it, or I got a great job, I got a great business. I don't want to mess those up. I don't want to get distracted, so I'm going to invest in real estate syndications. Then find the right sponsor for you and find the right deals for you. Find the deals that fit your goals. And if one of your goals is long-term cash flow, avoiding taxes, lower risk and that type of stuff, then invest with sponsors that are doing that. The one thing I see happen a lot is I talk to a person and they're talking about what they want, and then they go and do the opposite. So instead of investing in that cash flowing deal with little lower risk and so on and tax benefits, they invest in the deal that has a bridge loan on it. They are going to sell it within 3 years, or maybe it's 3 to 5 year hold. It's not providing any real cash flow. And then they invest in it, and it just not even fitting their strategy. It just to me, that doesn't make sense. So it's focusing on goals that actually align with what you're doing, or align with what you're doing with your goals, I guess. So it doesn't make sense to do that. And they do it. And why do they do it? Because the return looks sexy. It just does. And the project looks cool. And so that looks fun. It looks cool. The return looks good. And so they're like, hey, let's do that. This deal looks great. And it's great. And until things don't work, and because they got a bridge loan, the deal blows up or whatever it is. So there's high risk. And also the cash flow is not real a lot of times. So a lot of these groups are giving you fake cash flow. What fake cash flow is they're raising the money up front, and then they're giving you that money back as a form of quote unquote cash flow. It's a Ponzi scheme, but it's cash flow. So align your goals with what you're actually doing. And whether you're passive, whether you're active, it doesn't matter. I think the more important thing is that you come up with your goals, you focus on that, and then you execute properly. And you will be a lot more focused. I think you'll make a lot more money, and you'll be a lot more satisfied with the results when you get them. Now, can your goals shift? Can your goals morph and change and grow? Absolutely. But I think when you put something down on paper, you really want to try to stick to it and focus on it. And again, I think you're going to get better results, and you're going to be far happier in the end. All right, that's all I got for today. You have a fantastic rest of the day. Make every day a Saturday. Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe. Give us a thumbs up. Go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. But your rating and review just helps us push this out to more and more people and continue to grow our audience, and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it.
And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out. And we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.